Hi, I'm John Persinos, Editorial Director of Investing Daily. Welcome to my video interview with Nathan Slaughter, Chief Investment Strategist of the premium trading service Takeover Trader. It's an advisory published by Investing Daily's subsidiary, Street Authority. You know, Nathan has a pretty impressive CV, and I'm going to quickly summarize it for you. I think it's worth noting. Nathan's previous experience includes a long tenure at AXA Equitable Advisors, one of the world's largest financial planning firms. He also honed his research skills at Morgan Keegan, where he managed millions in portfolio assets and performed consultative retirement planning services. Nathan holds NASD Series 6, 7, 63, and 65 certifications, as well as a degree in finance investment management from the Sam M. Walton School of Business. Nathan, thanks for being here to answer my questions.
Thanks, John. Good to be here.
Great. Nathan, I want to tap your expertise in corporate takeovers, but first, let's get some context. The Omicron variant of coronavirus is spooking markets, causing a lot of roller coaster action in equities. Are there protective actions that investors can take right now to mitigate the risk from Omicron?
That's today's $64,000 question, isn't it? It's still early, but preliminary indications show this newest variant isn't really dangerous and actually has pretty mild symptoms. But it is highly contagious, which has health officials and government leaders on edge. Dozens of countries have already implemented heightened safety precautions, and some, like Japan, have even banned incoming flights from affected areas. This threat's giving investors a sense of deja vu, that we could be headed for another round of widespread travel restrictions just when the economy was getting back on its feet. Still, the market's probably overreacted. Remember Delta? It's already out of the news cycle. And Omicron will eventually fade away too. We're learning new and better ways to fight this virus. Pfizer's currently fast-tracking an innovative treatment with a 90% success rate that could possibly even end the pandemic. So investors need to stay on their toes right now, but I'm not recommending any major asset allocation shifts.
Okay. Well, you know, it seems that the Federal Reserve Chair Jerome Powell has retired the word transitory to describe inflation. In his latest remarks to Congress last week, Powell has indicated that inflation is getting hot enough to warrant an acceleration of the Fed's tapering. What are the ramifications for investors of this accelerated tapering?
Well, it's about time. I've been arguing since May, pretty loudly too, that these inflationary pressures are more persistent than Fed policymakers would like to admit. And every new report we see brings another reinforcing batch of data. Wholesale prices have shot up at a record pace for 7 straight months now, and that's spilled over into the consumer level. The Consumer Price Index, the CPI, just spiked at the fastest pace in 30 years. And that's why the Labor Department just authorized the biggest Social Security cost of living adjustment in 40 years. Here's the thing. Once inflation's been unleashed, it's really tough to contain, like putting toothpaste back in the tube. I think the Fed's lost credibility, and it's finally conceding that it needs to act more decisively. The first step is to start aggressively winding down emergency monetary stimulus that we don't really need any longer. Luckily, I think everybody saw this coming, so the reaction was muted. There was no taper tantrum. But investors still need to position their portfolios for an environment of rate tightening and elevated inflation. For starters, that could just mean overweighting natural hedges like real estate and commodities.
I see. Yeah, you know, so far this year, the level of merger and acquisition activity, it's been astronomical. It's been breaking records. More than $5 trillion worth of M&A deals have been recorded so far this year, already 40% more than the value recorded during the whole of last year, and smashing the all-time full-year record of 4.2 trillion recorded in 2015 by 19%. Now, one of your specialties, Nathan, is finding takeover targets before they get acquired, so you can make a quick killing. What analytical tools do you deploy to find these hidden M&A opportunities?
Well, if you look at enough of these deals, you start to see the same sets of fingerprints left behind. Think of it as financial forensics. So what we try to do is reverse engineer the whole process and look for situations where these common elements are all in place so we can pinpoint potential targets ahead of time. Really, buyouts happen for all kinds of reasons. Sometimes it's just to gain intellectual property, or to bolster market share, or to eliminate an emerging competitive threat. There have to be potential revenue and cost-saving synergies to capture. A takeover only makes financial sense when 1 plus 1 equals more than 2. Obviously, with any prospect, we also evaluate cash flows and balance sheets and capital structure. We also ask questions about the industry itself. We tend to prefer sectors where regulatory scrutiny is low and consolidation's high, like biotech and mining. All those things factor in.
Nathan, as the chief investment strategist of Takeover Trader, are you considering an expansion of your mandate beyond the direct parties in a takeover? I'm curious, are there ancillary segments and players in the M&A world that provide ripe opportunities for investment profits?
Yeah, that's right. There's been a lot of deals, but while M&A activity's been really strong, most of those deals involve privately owned businesses or really obscure foreign companies that aren't readily available to most U.S. investors. So we're trying to broaden our universe of investment opportunities. I never recommend investing on speculation alone. Mergers don't always materialize. So I gravitate towards quality businesses that are perfectly capable of thriving on their own. There's no doubts that buyouts can be the surest and quickest path to easy profits. That's going to always be at the core of Takeover Trader. But there are other situations that can also be positive catalysts to enrich shareholders. Things like spin-offs or business restructurings. So going forward, we're going to be looking at more of these opportunities.
Oil prices have been soaring this year. I've been reading your latest research in which you've pinpointed an under-the-radar opportunity in the oil patch that's poised to generate explosive gains. Could you please tell us a little bit about that?
Yeah, sure. You've probably heard of the Permian Basin out in West Texas. It's the most prolific oil field on the planet, even outpacing some of those legendary pools over in Saudi Arabia. It's coughing up almost 5 million barrels a day, and the underground reserves are mind-boggling. 46 billion barrels of crude and 280 trillion cubic feet of natural gas. So with numbers like that, you can see why there's been a land grab in this region as producers try to expand their territory. Some have been willing to pay $30,000 an acre or more. We've seen so many deals with independent producers taken out one by one that there just aren't that many left. The big fish have eaten all the small fish. Well, almost. We've identified one of the best. It has amassed about 80,000 prime acres in the heart of the Permian's most desirable zip codes. The company's already producing about 32,000 barrels of oil a day, and it has a huge inventory of future drilling targets to attack. And its horizontal drilling techniques are really efficient. So with oil prices high like this, it's gushing cash flows. Management's using some of that wealth to pay down debt and deleverage, which will only make it more desirable in the eyes of acquirers. These are really irreplaceable assets. So I think it's only a matter of time before a larger producer that's looking for growth comes knocking with a generous offer that could set us up for triple-digit gains overnight.
Well, it's a pretty exciting opportunity. Nathan, thanks for your time.
You bet.
As my colleague Nathan Slaughter just explained, we're facing the mother of all oil booms, and there's one stock positioned to benefit the most. For details, visit the URL you see right now on your screen. Well, that's it for now. Thanks for watching. I'm John Prasinos, Editorial Director of Investing Daily. Stay safe out there and stay invested.